Good morning. Lisa Soren, replacing temporarily David Jones. I would like to call the joint meeting of the Audit and Corporate Governance Committee to order. Is he here?
Can you do the safety message for us?
Your safety is of the foremost importance to the MTA. Therefore, we ask that you listen and adhere to the following instructions. If you witness an emergency, notify emergency personnel in the room and call 911 immediately. Please follow any audible instructions provided through the public address system or visually on screens in the event of an emergency. If an alarm sounds, wait for a public address announcement and follow instructions. If told to go to another floor or to evacuate the building, leave all unessential items behind and use stairwell A just across the main hallway or stairwell B down the hallway past the elevators. If you have a mobility disability or cannot self-evacuate, please proceed to stairwell D or E for assistance by MTA staff or emergency personnel. An automated external defibrillator, AED, for use by trained personnel is in the main hallway just past the elevators. If you need assistance during an evacuation, please tell an MTA staff member or emergency personnel. Thank you and have a safe day.
Darren, do we have any public speakers?
Yes, Chair. Good morning. We have 3 members of the public registers to speak today. As a reminder, we ask that all public speakers adhere to the MTA's rule of conduct and decorum. I would like to remind our public speakers that in the interest of time and fairness to all speakers, we limit everyone to 2 minutes. Please be aware that there will be a warning beep to remind you that you have 30 seconds to conclude your remarks. The first speaker will be Nzinga, followed by Deborah Greif.
Good morning, everyone. My name is Nzinga, and I'm with the Fair Ain't Fair campaign, and I'm here to express why the fare should not be increased to $3 this August. There's already an affordability crisis in New York City, where 1 in 5 people cannot afford to pay the $2.90 fare. Housing, food, health care, and the cost of living is rising faster than people's income, making it difficult for them to pay even for basic needs. Low-income residents and Black communities are the most affected by the affordability crisis, and to add insult to injury, they are criminalized and hit with exorbitant fines if they evade the fare, which is crazy because they can't even afford $2.90, much less the $100 and $150 tickets that they receive for evading the fare. The increase in the fare to $3 in August will only exacerbate this situation. I would challenge anyone on the board to take a deep dive and really look into the pockets of these residents and see that when you have to make a decision whether to pay a fare or put food on the table for your family, that's a clear indication that there's a problem. And this is the real life situations that people are facing today. So whether you increase the fare, if you increase the fare to $3, it's not going to make the situation any better. People are literally starving. Homelessness is on the rise. Housing costs, as I mentioned earlier, please, we don't want the fare to go to $3. And again,
Thank you. Okay. Next speaker will be Deborah Greif, followed by Maddie Bucky's Highland.
Say thank you for being the current MTA government and board has more been transparent. I am on my local community board, which I'm not going to identify because I'm not representing them. But we're pleased that when there are issues, government relations talks to us. We also like that you have been pushing for funding for people with disabilities to make sure that more of the stations and everything has been fixed. So from my end of the world in Brooklyn, which is technically South Brooklyn, and as a person of disability, daughter of a late person with disabilities, mother and sibling, person with disabilities, we say thank you.
Thank you. Our last speaker will be Maddie Bucky's Highland.
Can you hear me okay? Terrific. Good morning, everybody. My name is Matthew William Bucky's Highland, or some may know me as Maddie. Today's topic is about audits and corporate governance. For a long time, I've been advocating to have the commissioner of the New York State Department of Transportation be its chair and have a separate executive director in place. In my opinion, having a combined chair and CEO position is a little bit too powerful. And as far as audit's concerned, I do agree that we need a forensic audit done with the Metropolitan Transportation Authority. I think it will be great if we can have accessibility use, and that's why I'm excited to hear what the auditors will have to say. So with that, ladies and gentlemen, boys and girls, everybody else in the room, please have a great day, and please have a great summer if I don't see you. Thank you very much.
Thank you. Chair, this concludes our public speakers.
Thank you. And thank you to the public speakers for comments today. Do we have quorum? Yes. Okay. Next, we have the approval of the January Audit Committee minutes. Any corrections or changes to the minutes? May I please have a motion to approve the January minutes? Second? All in favor? Minutes have been approved. And the January Corporate Governance Committee minutes, any changes or corrections? I love this. May I please have a motion to approve the January minutes? Thank you. Second? Thank you. Minutes have been approved. Monica and Lamont, are there any changes to your committee work plans?
Yes, Chair. There's one change to the work plan. The executive session to brief the audit committee on proposed, pending, or current litigation matters is moved to July.
Oh,
And there
excellent.
are no changes to the Corporate Governance Committee work plan for this year.
Perfect, thank you. Okay. Now we have Jim McGovern, the MTA Deputy Chief from the Controller's Office, who will brief the Committee on Management's review of the 2024 MTA Consolidated Financial Statements. This review includes changes in capital, net assets, other assets, and operating revenues and expenses. Jim.
Thank you. Good morning, everybody. This morning, we're presenting a draft report, which is under review and in the process of being finalized. If there are material changes from the report, we will be informing the committee accordingly. Very similar to prior years. There we go. The MTA is comprised of the following reporting entities. I won't go through the listing of the 10 entities, but one thing I want you to focus on or understand in this listing of the 10 entities, 8 have separate audited financial statements. And what does that mean to the committee? What it means to the committee is that in addition to additional audit reports, each agency has its own threshold of materiality. And so as my colleagues here in Deloitte come upon something, let's say, that happens in New York City Transit, that level of materiality relative to SATOA, for instance, is probably more significant than it would be just on New York City Transit. So I think we just to kind of bring you up to snuff in terms of the complexities that that creates for us. Nope. There we go. So the consolidated financial statements haven't changed from prior year. It still starts with the management MD&A, and then the basic financial statements include net position, the balance sheet, the income statement, the cash flows, and the fiduciary position and changes in the fiduciary position, which are our pension plans. The notes, the only change to the notes this year is we've added an additional note, you'll see that at the end, for compensated absences. This year, there were two new GASB accounting standards that were required to be implemented. The first one was GASB 101, accounting changes and error corrections. This enhances the accounting and financial reporting requirements for accounting changes and error corrections. Fortunately, this standard did not have a material impact for the MTA this year. The second one, GASB 101 for compensated absences, requires a liability to be recognized for leave that has not been used if the leave is attributable to services already rendered, the leave accumulates, and the leave is more than likely not to be used for time off or otherwise paid in cash or settled through cash means. So let me go into a little more detail on this. This was a significant undertaking for us this year, and let me tell you what we did. Previously, the liability or the accruals for our compensated absences were primarily focused on vacation and sick leave, focused on paid at termination. And what does paid at termination means? Primarily that was focused on employees who had 10 years or more who are granted sick leave. For sick pay, this was a significant change. The new GASB requires us to look at all compensated absences scenarios and accrue associated costs such as FICA along with them. In addition, we had to perform an analysis to determine how much of leave will be used in the next year from the total population of employees, not those greater than 10 years of experience. And that was a significant undertaking of that analysis this year. We were also required to split the liabilities between short-term and long-term, and we were required to restate our 2023 report for comparability. So what did we do? We reviewed policies, we reviewed timekeeping and payroll expenses for payroll charges that might be compensated absences arrangements. We met with OMB, we met with labor relations, we met with HR, we met with timekeeping to go over and understand contracts and transactions. And then we met with IT to help us produce reports and queries never previously requested. And then we re-met with all those people because we needed to re-understand some of the open questions that we have. And the result, we learned, we updated procedures, we own an enhanced process now, and we will continually work to update this continuously. There's one person that's in the audience here I want to thank for their efforts. That's Lisa Tan. Lisa, just raise your hand. Thank you so much for your efforts on this. She was the force behind accomplishing this. And here is the impact to the implementation of this compensated absences requirement. Basically, long story short, we had to increase our liabilities $368 million. Now, that's a cumulative impact from inception to date, and that's not just a one-year impact. So I want to make sure that people are clear on that. I'll just pause if there are any questions on that. So, okay, next is the balance sheet. Summarized, we have assets of $120 billion versus $115, $116 in prior years, and liabilities and deferred outflows of $99 million versus $98 million accordingly. Nothing too exceptional to highlight here, except cash and investments increased, and that was primarily due to receipt of a preventive maintenance grant reimbursement for operating expenses at the end of '23 for about $2.3 billion. Capital assets increased. You know, that's our normal sort of output of increases to the projects. Nothing specific to identify there. And then the deferred outflows of resources decreased from 2023, primarily because of activity we had in 23 for prepayments of pensions, and there was a gain in market value gain in 23, and less of a market value gain in 24. Nothing exceptional to report here. On the liability side, long-term debt increased. We issued payroll mobility bands and also sales tax revenue bonds. The OPEB liability decreased primarily due to a contribution that was made in 2023 to the OPEB plan. And the net pension liability decreased. There was several factors involved due to the actuarial changes and market value changes. Total deferred inflows of resources increased primarily due to the OPEB change and some actuarial assumptions that changed in the OPEB plan and also the pension plan. Nothing really exceptional to report there. Assets and liabilities, I produce this chart every year. I think the only thing I want you to highlight is on the right. If the right bottom is the TBTA debt. Right now, TBTA and MTA, the debt is almost, TBTA is slightly higher in issuance of debt versus MTA, and that slowly has changed over the course of the years. That's really the only thing I really want to highlight there. Otherwise, everything's sort of, Transit's the largest entity, and there's nothing really exciting other than, the debt to report there. Capital assets and liabilities, I'll skip through that unless there's any questions. There's really nothing else, no significant changes that I'd like to highlight there. On the income, we had operating revenues of $8.5 billion, expenses of $20.6 billion. Subsidies and tax revenues, a significant increase there was that preventive maintenance grant that we received as part of the $13.3 million. That's the only significant change from prior year I'd like to highlight for everybody. In terms of the change in net position, it's primarily the significant change was the preventive maintenance grant received in the end of '23. In terms of the footnotes, the only change I'd like to highlight, I told you earlier, was footnote number 12, which is an additional footnote disclosure for compensated absences. If there are any questions, please let me know. I think we're good. Thank you.
Thank you, Jim. Any questions? Okay, moving right along. That's going to be a disaster. Okay, next we have Kostas Makrakis.
Yes.
Oh, there we go. Thank you, Monica. Managing Director and representatives of his team from Deloitte, the MTA's public accounting firm, to present the results of their review of the 2024 MTA consolidated year-end financial statements. The financial statements will be issued in final form after the Audit Committee review and approval. Managing Director will give the presentation. Kostas?
Thank you and good morning.
Good morning.
We have prepared the following comments to assist the Audit Committee in fulfilling their obligation to oversee the financial reporting and disclosure process for which management of the MTA and each of the 7 agencies are responsible. Our responsibility is to express an opinion on whether the MTA's and each of its agencies' financial statements and the supplementary information are presented fairly in all material respects in accordance with accounting principles generally accepted in the US. We are currently in the process of finalizing the audit of the MTA's consolidated financial statements, as well as the standalone financial statements of each of its agencies as of and for the year ended December 31st, 2024. We expect to issue our audit opinions within the next couple of weeks. Our audits are conducted in accordance with generally accepted auditing standards in the US, including those issued by the American Institute of Certified Public Accountants and the Government Accountability Office. The financial statements are prepared on the accrual basis of accounting in accordance with generally accepted accounting principles in the US. The MTA applies governmental accounting and financial reporting standards as issued by the Governmental Accounting Standards Board. As Jim mentioned, during the year, MTA adopted 2 new accounting standards, namely GASB 100 and 101. The MTA evaluated the requirements under GASB 101 employee compensated absences and adopted this standard for the year ended December 31st, 2024, and applied the retroactive effect of this adoption by measuring by the recognition and measurement of employee compensated absences as of January 1st, 2023. The net position as of and for the year end December 31st, 2023 was restated and decreased by approximately $370 million. This new accounting standard requires that liabilities for employees' compensated absences be recognized for leave that has not been used and leave that has been used but not yet paid in cash. MTA also adopted GASB 100, which is accounting for changes and error corrections, an amendment to GASB 62. The primary objective of this statement is to enhance accounting and financial reporting requirements for accounting changes and error corrections to provide more understandable, reliable, relevant, consistent, and comparable information for making decisions or assessing accountability. The MTA evaluated the requirements of GASB 100 and concluded that the adoption of this statement did not have an impact on the financial position, results, or operations or cash flows of the MTA. There was a change on the accounting policy regarding the recognition of projects in progress and capital accruals at the Transit, CIRTOA, and Bus Level Agency. This change was only at these 3 agencies and was made to increase consistency among all agencies. There was no change or impact at the HQ consolidated level. The change was on the timing of recognition of projects in progress at the agency level. Significant accounting estimates. The MTA incurs certain employment-related expenses associated with pension and other post-employment benefits. In order to measure the expense associated with these benefits, management must apply various assumptions to both the value of its pension benefit obligation and the value of the asset pool used to fund the pension. These assumptions include the discount rate, inflation, salary increases, investment rate of return, post-retirement mortality rate, and assumed cost of living adjustments. The MTA uses third-party actuaries to assist management in properly measuring the expense and liability associated with these benefits. And we also deploy our actuary specialists to assess the work of MTA's management actuary specialists. The MTA also is self-insured for workers' compensation, general, and auto claims. And this is the next accounting estimated liabilities arising from injuries to persons. Self-insurance reserves are estimated based on loss information obtained from third-party administrators like Corvell and Aetna, with consideration given to historical and industry claim development experience. Changes in assumptions like the loss development triangles directly impact the computation of the reserve and directly affect the income statement. As of now, there are no uncorrected misstatements or disclosure item pass identified during our audits at the MTA group or agency level. There were 2 recorded adjustments for other post-employment benefits at Transit and CIRTOA agency that were slightly above our minimum threshold, decreasing the OPEB expense and increasing the deferred outflow. There was one more correction at CIRTOA for pension, which again decreased pension expense and decreased deferred outflows, again slightly above our minimum threshold. There were no disagreements with management. We are not aware of any consultations that management may have had with other accountants about auditing and accounting matters during 2024. We had unrestricted access to the MTA senior management in the performance of our audits. Next topic, related parties. We have evaluated the MTA's identification of, accounting for, and disclosure of its relationships and transactions with related parties. Based on our evaluation, we believe the MTA has properly identified, accounted for, and disclosed its relationships and transactions with related parties in the financial statements. Examples of related party transactions are the transactions between the MTA and the agencies, the New York City, the New York State, the State of Connecticut, federal management, and the Board of Directors. Consistent with prior years, we have an emphasis of matter paragraph in our audit opinion. The auditor includes an emphasis of matter in their audit opinion if they want to draw the attention of the users of the financial statements. An emphasis of matter is not a qualification. We still issue a clean audit opinion. We just want to emphasize on these matters. The first emphasis of matter is that the MTA requires significant subsidies from and has material transactions with the City of New York, the State of New York, and the State of Connecticut, and depends on certain tax revenues that are economically sensitive. The second emphasis of matter is on the adoption of GASB 101 employee compensated balances, mainly for the reason because the comparative figures are restated. So we want to draw the attention to the users that the comparatives are restated. In our formal communications to the Audit Committee, we'll also include as an appendix the management representation letters. And 30 days after the issuing of our audit opinion, we will issue the management letter, and we will provide to management a couple of weeks before our issuance to provide the responses, and also share in advance with the Audit Committee so they have time during our next meeting, probably in July. We also plan to issue the single audit compliance in the second week of July, and the National Transit Database Agreed Upon Procedures report by the end of June. Before I conclude my remarks and my presentation, I would like to express our appreciation to the management team for their outstanding cooperation, transparency, and understanding throughout the audit of the largest transportation authority in the country. By management, I'm referring to Kevin, Jay, Jim, and Lisa, the Monica and the internal audit function, the presidents of each agency, Paige and the legal department, Lamont and compliance department, as well as Rafael and the IT department. I would like to thank all of them for their assistance in providing the necessary information to perform and conclude the audit, particularly in instances where we were uncertain about the appropriate sources or experienced delays in obtaining the required information. In addition to management, I would like to extend my gratitude to the entire Deloitte audit engagement team. In particular, I would like to recognize the senior managers, Darsan, Patricia, Anuj, Mike, and Komal, our actuaries, Kevin and John, the IT team, the internal quality review team, as well as our subcontractors as required by our contract with the MTA. And with that, any questions?
Thank you, Costas. Are there any questions from the board? Okay, hearing none, may I have a motion to accept the 2024 year-end financial statements and a recommendation to move them to the full board for their final approval? Second? You got it? Yep. The MTA 2024 year-end financial statements are now accepted by the Audit Committee and will be recommended to the full board for their approval. Okay. Continuing with Deloitte, we have their review of MTA's compliance with the guidelines governing investment practices. Costas, back to you.
Thank you. In connection with our audit, nothing came to our attention that caused us to believe that the authority failed to comply with the authority's investment guidelines, the New York State Comptroller's Investment Guidelines, Section 2925 of the New York State Public Authorities Law, or Section 201.3 of the New York State Public Authorities Law, insofar as they relate to accounting matters.
Thank you, Costas. Any questions for Costas on this issue? May I have a motion to accept the investment compliance report and move it to the board for final approval? Okay, second. All in favor?
Aye.
Okay, the investment compliance report is accepted and will be recommended for approval by the full board. Okay, moving on. We have Lamont, who's going to do our MTA Chief Compliance Officer. Lamont is here with the agency internal control officers to provide a quarterly report on the status of open and past due audit recommendations previously accepted by the agencies. Lamont?
Thank you. Good morning. So there is a presentation in your book. I'm not going to actually go through it. Sorry, I should have told you. So, this committee asked us to continually monitor the implementation of remediation plans. We have been doing that and providing this report each quarter. I'm happy to say that, as I have said in the past, the agencies and the departments continue to implement the remediation plans at a consistent pace. There is nothing, I think, at this point that it raises any concerns, at least from a compliance perspective. I would say that most of the ones that are listed in the report that are past due, that are of a higher priority, are ones that require what I would call coordination among multiple departments and multiple agencies, but they are being worked on, and it is a relatively small number, I think at this point of 36, none of which I would say raises any significant concerns at this point. But I'd be happy to answer any questions that you may have.
Any questions for Lamont? Okay. Now we go, the first item of the corporate governance agenda is the review and approval of the MTA All Agency General Contract Procurement Guidelines and All Agency Service Contract Procurement guidelines. Public Authorities Law, Section 2879, requires the board to annually approve the MTA procurement guidelines. Lamont?
Thank you. We are proposing one change to the guidelines as discussed in the staff summary. This change is to align the guidelines with changes in Public Authorities Law, Section 1265B, which was amended to increase the threshold for Tier 2 Small Business Development Program contracts from $3 million to $5 million. Again, this change is simply to align our guidelines with changes in law.
Any questions on this by members of the board? Okay. The next item on the agenda is the review of the MTA All-Agency and MTA Board Member Code of Ethics. Lamont, again to you.
I think we need a vote
We need a vote on the,
on the guidelines.
that's right.
Yes.
I'm sorry, that's my mistake. They had it
Okay.
written for me and I still messed it up. So we need a vote going back to the procurement guidelines.
So moved.
Second?
Second.
Okay, all those in favor?
Aye.
Aye. Sorry, Lamont.
Okay.
Now we go to Code of Ethics.
Everyone's favorite subject. All right. So every year, this committee is required to review the MTA's Code of Ethics, right? Both the employees and the board members. I was hoping Andrew was here today because we are actually celebrating the 20th anniversary of the MTA Code of Ethics back on, many years ago, back on May 25th, 2005. I keep saying 25.
He's listening, he said.
He's listening, good. Andrew, and I'm not going to blame him specifically. The MTA adopted its first all-agency code of ethics. The board made a determination that ethical leadership and the highest ethical standards was of the utmost importance to this organization. A year later, we adopted the MTA board member code of ethics. So I'm happy to say, sitting here today, as one of the few people who actually remember when we did that, that we are celebrating 20 years of ethical leadership at the MTA. So thank you all for your support and encouragement. Having said that, there are no changes.
Okay, okay, no changes. Any questions on them? Yes, go ahead, Neil.
This is probably a more philosophical question, Lamont, than it's worthy of our environment here. But have you found that the institutionalization of a code of ethics has changed behavior in any way? I think a lot of folks think there's a value in them as a document at a broader level, but when you put together a group like this, whether the employees or the board, maybe you find you hire already people who already have relatively high standards of ethics, and maybe the writing of it is just helpful on the margin. But could you give any, after 20 years of this being in place, any viewpoint about its use and how we've used? I'm not suggesting at all it's not useful. I'm just suggesting, have you been able to see, because you see so many, hopefully not so many, you see occasional cases where things may be butting up against the code. So if you wouldn't mind waxing on for a couple of minutes, because I think 2 decades probably deserves a little reflection then.
So, I mean, the first thing, if you read the first line in our all-agency code of ethics, we say it's a guideline, right? It's not a book of rules, it's a guideline. Because I think all of us know that there are some things that we all know are just plain wrong, and there's some things we all pretty comfortable that's right. But where our code lives in that gray area, and it helps employees try to figure out, is this ethical? Is this a conflict of interest? So I think the way to look at the code is not as a book of rules, but as a guide, and that's what we tell our employees. The other thing that I think we've done over 20 years is we've operationalized the code, right? So the code doesn't just sit in a shelf not being utilized. It's actually operationalized. What do I mean by that? So for example, within HR, we work very closely with human resources around conflicts of interest, making sure that when we bring new employees on board, right, that we talk to them about conflicts of interest, that we have conflict of interest disclosure documents that they have to sign. The same thing when we do procurements. So we haven't just set out a code that sits in a book. We've actually operationalized it in procurement and HR, many things. As I think all of you know, you all had the privilege when you started on the board sitting down with me and it was a good discussion though, right? About ethics and integrity and your responsibility in terms of the public authorities law and the code to be ethical leaders for the organization. So by operationalizing and putting in the things that we do every day, I think that's why our code has been as successful as it is, because it doesn't just sit on a bookshelf. You know, we do trainings, we do reminders, but we operationalize it. So when you do a procurement, when we're doing a procurement, our staff is required to make those disclosures, to think about the implications of who these vendors are that may be coming forward and whether there are any ethical implications. So I think after 20 years, you know, we've done a very good job. I mean, I'm a member of many organizations, and I can honestly say our ethics and compliance program is, and please, this sounds like bragging, but it is perhaps one of the best, both private and public, anywhere to be found. So, and that's because of a wonderful staff. I mean, they're actually some of the folks from compliance are here. They're the ones that really make it work. I'm just the one that does all the talking. So can I just have 5 seconds for the compliance folks? They never get any recognition at all. So Daryl and Tiffany, Ray, come on guys. There we go. Everyone's there. So thank you everyone, I appreciate it.
Thank you, Lamont. The next on the agenda is the review of the MTA's whistleblower policy. Lamont, again.
It's fine. Every year we are required to review it, and there are no changes being recommended at this time.
Okay. Lastly, Lamont, for policies for board approval.
Yes, so there are 4 policies in your exhibit book that require board approval. All of these policies have been reviewed and approved internally by their particular agency in the case of Long Island Railroad, which is one of the ones in the exhibit book. And there are 3 all-agency ones which have all been reviewed and approved by senior management at the MTA. But they do require your approval pursuant to Public Authorities Law 2824.
Okay, may I have a motion? Second? All those in favor?
Aye.
Okay. Now we come to the most important part. May I have a motion to adjourn the Audit and Corporate Governance Committee meeting?
So moved.
Second? All those in favor? This joint meeting is adjourned.